Well, of course, the whole focus today is on IndusInd Bank, and let's take this discussion forward with Shriram Subramanian, who is the founder and MD at IndusInd. Hi, good morning, Mr. Subramanian. Good to be speaking with you. Give us your first take on the kind of disclosures that IndusInd Bank has made, that derivative portfolio discrepancy that's going to take a hit on their overall net worth with over 2%. Give us some sense that what's your reading on this whole thing, because what the company is saying that the RBI was already kept in loop, but they did not actually think of telling this to the investors out there even when it was discussed in Q3.
Good morning. As Warren Buffett said, derivatives are instruments of financial mass destruction, so to say. Seems like IndusInd Bank had this in their portfolio. One would like to think that these are rogue trades, some trades which went wrong, long-dated trades. They may not have had a good risk management to figure out the impact immediately. So to that extent, from the treasury operations, whatever impact they had, they could not gauge it fast enough. So as I said, this trade was not taken this financial year, but was taken in the past. This trade doesn't belong to client accounts, but belongs to their treasury operations. So from all these perspectives, it looks like this trade was hidden somewhere in their books. And the moment they got to know, they informed RBI, but likely they missed out on informing, or they probably did not think of informing the investors because they thought maybe the position will correct or whatever. But I mean, I'm hoping that they did not inform the board and the management did not deliberately hide the loss or the impact, so to say, from investors. It may have been a genuine oversight, or it may have been a rogue trade that went wrong, and the moment they got to know, they have disclosed. But more important is, banking is a business of trust. So going forward, I think counterparties or clients may be wary of trading with IndusInd. So from that perspective, that could be a longer term impact for the bank.
Well, Mr. Subramanian, while the bank has assessed the impact of almost 2.4% on their net worth, it could actually change following the audit, is what we understand. The bank did not clarify which department is responsible, but good to believe that it could be because of the treasury and the global markets?
Yeah, that's what they have said. It's the treasury position which they have taken. It doesn't belong to a client trade. So from that perspective, it seems to be a risk management which could not catch these trades or the impact of the trades that the treasury had taken. So I hope they put in place stronger risk management practices, stronger, I would say, internal controls to figure these trades and manage these trades better going forward.
All right, but the other thing that the street was really wondering that how these events were actually lined up, because firstly, when we see the CFO resigning, then there comes Sumant Katpalia extension for just 1 year, wherein the 3 years was on demand, and then you have this particular disclosure coming in. Is that something that you also question at this point in time?
Could be, because the moment they made RBI aware of it, probably RBI took not a kindly view of the fact that either the bank was reporting it late to RBI, or was late to inform to investors and shareholders. So to that extent, RBI may not have taken a kind view of the CEO and the leadership out there. So to that extent, they may have sort of taken this view that a 3-year extension is not feasible.
All right, with this, Mr. Subramanian, we'll let you go on that. Really appreciate you taking the time out and giving us your view on this particular news flow.
If you like this video, then like, share and subscribe to ET Now.